Good morning. Welcome to the B.F. Anderson Technical Report for April 23rd. Is the market efficient? I think it's a very big question. Warren Buffett talks quite a bit about market efficiency, and he believes that the market is efficient. It's just not 100% efficient. It's, maybe 80, 90% efficient. In business school, we were taught about the efficient market hypothesis, which was basically a theory that said that the market is a discounting mechanism, which means it's looking to the future. So if you think about the word speculation means to see the future. So when we're looking at stocks and we're looking at the market, it's best to use trend following, because if you use your opinion, and opinions are a dime a dozen, I have an opinion, you have an opinion, everyone has an opinion, CNBC guests have an opinion, and if you get too hung up in opinions, it can really mess you up. So let's take a look at what's going on here. Definitely seeing a turn up in the lower moving average of the NASDAQ, which is a very positive sign. In fact, this is a buy signal at this time. Now, what we're concerned about, of course, is that we're going to retrace and retest the old lows down here, but so far so good. In fact, on the weekly indicator, we are now in the second week above the 35-week moving average, which is actually turning up. So if you look at these graphs, I want to share one thing. This is your opening price. This is the range during the day, and here's your closing price. So last week, the NASDAQ closed above the 35-week moving average. So 2 consecutive weeks will be confirmation of our first buy signal. This is our confirmation. Now, as we get into graphs, we started out just now with a daily graph, then we went to a weekly graph. Now we're going to go to monthly graphs. Now, I was taught about monthly graphs by a technical analyst named Louise Yamada, and she was very high on the 10 and 20-month moving averages, especially where you're using golden crosses and death crosses. So on the small cap index here, which is the S&P 600, we are on a death cross, and you can see that the index really hasn't done much to rally. So the small caps are definitely lagging this market. Now, if you look at the large caps, here's the S&P 500. You can see the difference here. We're not on a death cross. The index is rallying almost to the lower moving average. So the S&P is looking good, whereas the small caps aren't. We really want to see a broad rally. We want to see where the economy starts, the market starts to discount the future and seeing positive things coming down the road. And that would be where you would get a broad market, a broad bull market. But the small caps are just not happening. Here's the NASDAQ, same case. We've got, no death cross. In fact, you can see the true strength of the NASDAQ, which is primarily technology stocks, but also what's driving this market quite a bit is biotechnology stocks. So you can see this index has actually gotten above the upper moving average, and there's no death cross. So it's all S&P and NASDAQ, and I would say things like biotechnology are definitely leading this market. Now on China is holding up pretty darn well. You've gotten a golden cross buy signal. You can see that the index has moved back above the upper moving average. So actually China, there are some Chinese stocks that do look quite interesting. I know China's a tough subject right now. Now, this is our aggression index. We're going to look at this two ways. We're going to look at it on a daily graph, and we're going to look at it on a weekly graph. Now, on the daily graph, we're using the 50-day moving average. Now, remember, this is a ratio of the NASDAQ compared to the consumer staples stocks, so that when people start to get aggressive, they're going to buy technology stocks, things that have some growth potential. So you can see here, holding above the 50-day, but the 50-day has not turned up, which would be a real positive. But there's definite improvement here. Here's the NASDAQ on the ratio that we just went over on a weekly basis. Now, this indicator is interesting because what we've got here is a 40-week moving average compared to a 10-week moving average. And the rule is that you need to get above the lower moving average, and the lower moving average turns up, which is actually starting to happen. So people are becoming a little bit aggressive here. Now, on our primary economic indicators that we're looking at, there's three. First thing we're looking at is the yield on the 10-year Treasury note, pretty flat after a tremendous drop into historic low levels. We've just basically sitting there. It really is somewhat of an indication that there's very little loan demand right now. Now, we all know about the price of oil. Price of oil has been really plummeting here. I'm going to show a graph here in a minute just to sell you a little bit on that 10-20 long-term monthly graph, because oil has been in a downtrend, according to that graph, since mid-2014. So oil has been basically in a downtrend for over 6 years, and it just shows you how valuable that indicator is, because it would have told you avoid energy at this time. Now, this is the small cap index. This is the S&P 600. You can see it's improving, but somewhat flattening out here recently. Now, the put-call ratio, where we're measuring fear and greed, we're kind of getting back into a normal area. We got into a tremendous amount of fear. In fact, record-setting fear up here. Now, that this drop was pretty much started when you got into extreme greed, but we are in somewhat of a neutral position there. Now, on looking at the 200-day moving average, we're starting to work our way towards it, just have not been able to get back above the 200-day. And then if we look at the daily S&P using the 25-day and the 50-day, you can see that the 25-day has turned up, which is a buy signal. Now, what we would really like to see happen here is that we confirm by getting on through the 50-day and then starting an uptrend that moves left to right up at like a 45-degree angle. But we're just not there yet. You need to continue to be cautious. I would do some nibbling, but be very aware of it. Now, I mentioned earlier that we were going to look at oil. This is mid-2014, death cross. Oil never got back up to the old highs. We've got another death cross, and then we've got a plummet. It's just really amazing to me how much the price of oil has dropped. This is not a good sign, and it's not good for the economy. Now, what we're also wanting to look at here briefly is the percent of stocks on the NASDAQ that are above their 200-day moving average. Now, the reason this is important, I went back basically 20 years, and I said, okay, where were the extremes? Where were the oversold places? Where are we more than likely seeing a bottom? Well, you can see here that we got down to this level of the percent, which was 15%. Only 15% of the NASDAQ stocks were above their 200-day moving average. Well, it coincided pretty closely to a low in the market. Then 2009, you can see the same situation. 2011, same situation. 2016, 2019, which was, 18, which was last year. Here we are again. Okay, we got down there to this extremely oversold condition. So, the odds are really starting to favor that maybe the market has put in a low. But we could retest. We don't know if it's a W bottom. We don't know if it's a V bottom, an L bottom, a U bottom. But it does look like the market has gotten quite oversold and could be making a bottom. Now, this is a ratio that I wanted to go over. This is the Vanguard Mutual Fund Value ETF. It's an ETF, not a mutual fund. And then I'm comparing it to the Vanguard Growth Stocks. So you got value stocks, which are generally speaking stocks of the past. The story that Gerald Loeb tells, I think is so interesting. He had a widow woman come into his office in 1928. And he recommended a stock that he thought had a bright future, which was a growth stock. It was called Columbia Pictures. Well, the woman left his office. The next day, the widow woman's son came into Gerald Loeb's office and berated him and said that he needed to have his mother in the New York Central Railroad. So in other words, what happens with these value concepts is that they think just because it's down and it's a value that makes it a good thing. Well, if it's the passenger rail industry, which was going bankrupt in the 1930s, Columbia Pictures did quite well. So in other words, value versus growth. I'm a growth guy, used to be a value guy, but I prefer growth. Just makes more sense to me. Now, this ratio you can see is hitting an all-time new low ever since these funds were created. I mean, we have basically plummeted. What this is saying is things like oil stocks, bank stocks, airlines, cruise lines, whatever you would consider to be a value stock, is way underperforming the growth stocks. This is very positive for growth investors. Now let's get into the top five. I do want to mention something about the pharmaceutical industry. I do believe that there is a sea change taking place here where the legislative risk to the pharmaceutical industry has pretty much gone away, because I think the American people are really realizing how important it is that we allow these companies to make profits so that they can have research and development budgets to invent new drugs to cure viruses and so forth. Now, Moderna is working on a vaccine. You can see here what's interesting about this pattern. I want to mention this to you. I go through literally hundreds of charts daily, and I have noticed that during the drop that we got, in mid-March, most stocks broke below the 50-day moving average. But those that didn't, I really think have what you call relative strength. So Moderna held the 50-day, has now been in a very solid uptrend following this 10-day, has broken out. This is basically what you call a gap up. So they are working on a vaccine. So let's see. This is gold. Now this kind of shows you that when gold's doing well, that's not really a positive sign for the economy. But anyway, you can see here Newmont Mining breaking out. Gold stocks are starting to move. This is another company working on the coronavirus vaccine. This is a company called Novavax. You can see here, same pattern. It did not break the 50-day. It held the 50-day. And as you can see here, following that 10-day nicely, gap up, breakout. So I think there's a continuing theme here, other than gold, is that you want to take a look at things that are going to solve problems. So these guys, meaning Novavax and also Moderna, they're trying to solve the problem of creating a vaccine. But that takes us on to the next stock. This isn't one of our biggest positions. We own the stock. This is our best performer. And so when you have a really good performer in your portfolio, it really makes sense to go look at what kind of technical pattern does this particular stock have, and maybe I can find other companies that have this pattern. Well, this is Regeneron. Now, Regeneron, a little bit of history on them. They came up with a treatment for a virus called Ebola. Now, the way I understand the story is the death rate or the mortality rate for Ebola before this treatment was over 90%. After this treatment was developed and started being administered to the patients, the mortality rate dropped to less than 4%. So, a lot of these diseases out there, they never seem to get cured, but there does appear to be companies out there that are capable of coming up with treatments, such as AIDS. With AIDS, which was a virus and a disease, it was really never cured, but it's treated, and that was Gilead's science's big breakthrough. But again, look at the pattern here. But here's what's most interesting about Regeneron. It didn't even touch the 50-day. And now it's moving up that 10-day moving average. Pretty much, you can see this big jump in volume here. We got a gap up in the price. I just think these guys, these scientists, are going to solve this thing, and they're going to probably do it with a treatment, if I had to guess. Now, here's Tesla. Tesla, as you can see here, is the only one that has the pattern where it actually broke below the 50-day, which means to me that, there was a lot of selling. I mean, we're talking about a stock that went from $950 a share all the way down to $350 a share. And, of course, you're going to get some kind of bounce back. But I would prefer to really pay attention to stocks that are showing that initial strength of holding that 50-day and then starting to rally. So basically, that's it. I do have a list, by the way. If you want to contact me, I'd be happy to share it with you, where I've gone through my database and I have identified every company that held the pattern, such as Regeneron, Moderna, and Novavax. So if you have any questions on that, give me a call. Thank you very much.